Nick Cherney, we've seen a whole lot of volatility so far in this very young year. The VIX was mostly around 13 to 15 in 2014. Now it's around 20. Why the step up in the fear index?
Yeah, we saw that trend starting really in October last year. The VIX touched 30 intraday. That was the first really substantial move up that we'd seen since 2011, and we haven't seen that stop really up until today. And I think it's a function of we're 6 years into a bull market, and people are cautious. So they're optimistic. We had a strong year in equities in 2014, and people definitely don't want to get left behind. But there's a lot of caution in the market.
Do you think it's signaling something bigger, like a crash?
I think it signals a heightened risk that we could have a real correction. The VIX is basically an emotional gauge, right? And what it's signaling is there's a lot of emotion in the market, a lot of concern, and that can really accelerate some sort of catalyst that could lead to a larger decline. But these aren't predictable events, obviously.
A lot of people say it has to do with the Fed ending its quantitative easing program. Do you believe that?
The reality is that we've had massive sort of liquidity injected into markets around the globe by central banks everywhere. And we're not seeing a simultaneous withdrawal of that easing. And so I think it's hard to pinpoint everything onto something as simplistic as that. I think if every central bank globally was pulling back at the same time, we would have a real liquidity crunch. But we don't see that. There is a lot of liquidity still being injected into markets around the globe.
Now, VelocityShares offers a lot of ETFs, which enable the people to trade the VIX. Should this be something that individual investors are doing? Who's using your products?
Yeah, it's interesting. Our VIX-related products, our pure VIX trading instruments, are really designed for sophisticated institutional investors. They are very powerful tools, and when deployed correctly can have pretty compelling results, but they also have the potential to be misused if they're not well understood. And that's why we really have two varieties of products. We have short-term tactical products that are directly linked to the VIX. And then last year we rolled out 2 ETFs that are really targeting investors who want somebody to do that work for them and try to put some hedging and some VIX-related instruments into the portfolio, but in a managed fashion. And so we have SPXH and TRSK, which are our 2 ETFs that are targeting the investor who maybe doesn't have the time or expertise to manage their own VIX investments.
Well, those are your tail risk ETFs, right?
That's correct, yes.
But a lot of people think that the volatility is caused by leveraged ETFs, and you have a lot of those in your portfolio. What do you say when people accuse leveraged ETFs of being behind the volatility?
Yeah, we don't see that in the data. I think a lot of people look at this from analysts on the street to regulators, and I think in the data it's pretty clear that leveraged ETFs really are not contributing materially to equity market volatility.
Thanks a lot, Nick Cherney.
Hey, thank you.
And thank you for watching The Street.